Let's talk about Disney. There's some exciting news around Disney with their 2022 forward looking outlook. Disney Plus and their subscription based business. And there's more. Welcome to Tomorrow Venture Investing. All right, taking a look at Disney. We should start over with the stock price of Disney, which is trading right now at 137 a share. Uh, 136 is a 52-week low, so we're sitting right off the 52-week low. Uh, did drop some on Friday's trading up to 7%, most likely due to the volatility of the market as it is right now, and Netflix uh, dropping over 20% on Friday. So that might have something to do with people are starting to worry about, is Disney going to be able to keep up with their subscriptions if Netflix has missed that mark. $203 is the 52-week high for this one. We've got 32 analysts covering this stock, which seems to be mostly all bullish. Very, very bullish. Due to the market, though, I would say that my price target for this stock right now is about $100 a share, and I'll go over that more as we go on. So yeah, Disney, I believe, is a really good buy for under $100 or less, with the way the market volatility has been, and with Netflix missing their last earnings and their numbers of their subscriptions. I can only leads me to believe that Disney is going to end up missing as well as they did in the previous quarter. Now, their streaming platform is only 2 years old, and as of right now, their last quarter, they announced 118 million Discovery Plus subscribers. Their streaming platform includes Hulu, Disney Plus, and ESPN for the sports. So this is what we're getting right now. And so we got 118 reported Discovery Plus. We also got 17 million in ESPN and 43 million in the Hulu subscriptions, for a total of 179 million as of last quarter when they announced it. They gave out in their last quarter a lot of 2022 guidance and forward-looking guidance, and they believe that they have a long-term goal of 230 million to 260 million subscribers by 2024, and at the same time, they plan on being profitable with their streaming service platform. So, but at the moment right now, with the way companies, I think, are going to do a lot of miss on their earnings, or come out with not that great of guidance forward looking. I think the stock market has a little bit of a turmoil ahead, and I believe this stock here has some room to fall before I think I should be starting to scoop up some pretty good deals. And so Bob, the CEO, has reported in their last earnings that they are doubling the amount of original content from their marquee brands Disney, Marvel, Pixar, Star Wars, and the National Geographic is coming to Disney Plus in fiscal 2022, with the majority of the highly anticipated titles arriving in July through September. So they gave a lot of, in this last previous quarter that they did in November, they did a lot of fiscal guidance of 2022, but they more said, had more positive light, more toward the third quarter announcement and the fourth quarter. So in other news, Disney's cruise lines They have announced that all four of their ships are now selling and continue to see tremendous demand, incredible experiences they offer at sea. Later on this year, in June of 2022, we should see a new edition they have purchased and is going to take delivery of a new ship. It's called the Disney Wish. In June of 2022, they also have two more other ships that they're going to take delivery of, according to the last announcement, Bob said, which is the CEO. In 2024 and 2025, with these three new vessels coming on board, it's going to help increase their capacity footprint along with the four other ships that they have sailing now. All right, now on to their motion theater. They are expecting to release 9 releases this year. Christina, the CFO, said. So she anticipates another 9 more movies this year to help with that front. Christina also talked about that they expect the Disney Plus subscriber to have significantly higher in the second half of 2022 than rather the first half. And additionally, they also expect to be at the peak of their year of losses in the fiscal of 2022. So they're claiming that's better than they expected. So they are losing money on their subscription pace business at the moment. And according to her, they plan on peaking out and then, curving back down. All right, moving on to the technical analysis point of view of the Disney stock analysis. Let's scooch over here. Let's move this right up there. Okay. So here we are with the Disney chart. We have broken through all 4 of the moving averages. So we're below all 4 of the moving averages. We have a nice gap down, which probably wasn't nice to the people who owned shares at that time. But yeah, there's a gap down. And gaps are caused by inflections of the price and the aftermarket and pre-market hours. So from one day to the next day, when the market closes versus the market opens up again, it can gap down or gap up. Why I said this is nice is because, for one, I don't own shares of the company just yet. But usually when there's a hole like this in the chart, the price will eventually go back up and fill up that area. And so you can one day expect to be back at $174. And according to the analysts, they expect like $193 for this year, I believe. But at the moment, we have broken through all 4 of our moving averages. And our trend lines here on our percent K is already starting to trend lower. And I don't believe they're going to make their mark. They already missed in their quarter right here. They missed in the last quarter. They missed by 15 cents, which is 28, almost 29% basically miss. So they're expected to come in at a little bit higher in this next quarter, but I don't think that they're going to be able to make it. And especially with Netflix having a hard mess as them on their subscriptions as well, I think that's going to pull down the business. So, but I believe with the way the market and the volatility of the market is right now, even if they came close or even made it, I still think this stock will fall below the $100 mark, and that's what I'm predicting. It's going to fall below the $100 mark, and I believe as it drops lower and lower from the $100, it becomes a better buy. I'm hoping I'll be able to start picking some shares up between $70 and $100. I truly believe with the market volatility as it is lately, and as it is going to be going on, and while these companies are putting out their earnings, because this is earnings season, all the way into the end of March or the middle of March. I don't believe people are going to give out, or the companies are going to give out great guidance for fiscal 2022. I think a lot of them are going to be pulling back off of the numbers that they're seeing now, and the way I'm seeing the market and with inflation is today. So that's where I'm at with Disney stock. I believe you always invest at your own risk, but this is what I found out, and we will continue to keep covering it with this one. Hey, thanks for watching Tomorrow Venture Investing. If you've not done so, hit the like button and subscribe. And also, if you like, leave a comment. Let me know if you enjoyed this video or not. According to the YouTube algorithm, they suggest you should watch this video next. And I want to take this time out to thank you. Thank you so much for watching all the way to the end. I appreciate it.